The market is up today, but do not let the green screen fool you. This is not a clean risk-on rally. This is a very selective market. Big indexes are getting help from AI, mega cap tech, and traders buying ahead of the long weekend. When Treasury yields cool even a little, growth stocks get breathing room, and that can pull the whole market higher. But under the surface, a lot of stocks are still struggling. Why? Because the macro picture is not fixed. Oil is still a problem because geopolitics are still a problem. The US-Iran situation keeps energy risk alive, and energy risk feeds inflation risk. If oil stays high, consumers feel it, companies feel it, and the Fed has less room to cut. Then you have inflation expectations. Today's Michigan consumer sentiment data matters because the Fed does not just watch inflation today. It watches what people think inflation will be tomorrow. That is where this gets controversial. The market wants to price in an AI boom, but households are still pricing in a cost of living squeeze. That is why some stocks can rip while others fall. Investors are rewarding anything tied to AI, pricing power, cash flow, and strong balance sheets. But they are punishing companies exposed to weaker consumers, higher input costs, debt, or slower demand. So today's market is not saying everything is fine. It is saying we trust the winners and we are abandoning the weak. Watch Nvidia and semis for momentum, oil for inflation pressure, the 10-year yield for valuation stress, the dollar for global risk, and consumer sentiment for the real economy. My take: this rally can continue, but it is becoming less broad, more fragile, and more dependent on a handful of names carrying the market.